Hey guys, Toby Mathis here, and today we're going to go over the top 10 reasons to use an LLC. And I'm going to say this in reaction to a video that I watched recently from one of the tax influencers out there that was saying like, hey, people were setting up too many LLCs. People don't understand why they're setting them up. Sometimes they're setting them up in advance, ideas that they're going to be expanding their business and that they're popping them out like hotcakes or something similar to that. And I was going to say, yeah, I understand it. And you kind of focused on two areas, and I'll make those the two first ones I get into. I won't get too far ahead of myself, but it was kind of the liability protection idea of, hey, if you're going to run a business, make sure that it's not in your personal name because then you're personally liable for that type of thing. That would be a good reason to use one. And then tax flexibility. But I think that what it lacked was the idea that there's probably a good 8 other reasons why people use LLCs and why these things make sense. And I could just do some counterpoints too, to say, based off of my experience, I've been doing this close to 30 years as a tax attorney, of what I have seen in my experience with clients as to why you set these things up, sometimes far in advance of actually doing an activity. We're getting out ahead of it so that you do not expose yourself to certain downfalls and risks as an individual. So let's go over the top 10 reasons people use an LLC. And the number one, I'll just be straight up, liability protection. Liability protection is absolutely one of those things that when you set up a limited liability company, and by the way, this could be a corporation as well. I'm going to say LLCs because an LLC could be taxed as a corporation, but I'm just going to say when you set up a limited liability company, that's what LLC stands for. If somebody says limited liability corporation, please make fun of them. It's a limited liability company with a state. You're paying the state for protection. What kind of protection? Protection from personal liability for the actions of that business. So your personal assets are shielded from the business debts, from lawsuits and creditors. So your house, your car, your savings, they stay protected even if the business, the LLC, is sued. That's a big reason. Now the question is, when do you set that up? And sometimes people set them up before there's an actual activity. And the argument is you're creating complexity where you don't need to. And I would say, I've been here and I'm in Las Vegas, and I remember 2008, 9, 10, 11, 12, where you're going in and you were trying to buy homes all the time. You did not want to buy these houses. A lot of these sight unseen, a lot of times at the auctions, in your individual name. As a real estate investor, you do not want to own properties in your individual name because you are now personally exposed to anything that happens on that property. Somebody steps on a nail, you get sued. Real life example, somebody stepped on a nail, the insurance kicked them almost $1 million in liability and let the owner be exposed to the excess. And they were like, Jiminy Christmas, they just handed over the policy and now I just fed my foe who is now going to keep coming after me. So there's actual serious exposure that comes along with owning a property. Sometimes you set up that LLC in advance if you anticipate that you are going to be buying properties. And I'll use an example. Let's say I'm going to buy 4 properties in Indiana, and I know that I'm going to be buying properties, or there's a strong likelihood. I may set up 4 LLCs far in advance. And somebody might say, well, you're going to have all these costs, you're going to have all this expense, and you're going to have to do bookkeeping. Well, it's not doing anything yet. Yes, there's some expense. If you're working with a firm like mine, Anderson, where our titanium members do not pay for LLCs, like they literally could set up 20 and it wouldn't cost them anything other than the state filing fees, maybe registered agent fee for service of process, but that's it, then it's not a high expense. But what it does, it allows you to negotiate and try to enter into contracts. Sometimes you're buying at auctions, and again, you get a house, you may not want to own that house. If it was in your name, you have personal exposure. If it's bought in the LLC, you can isolate that exposure. And there's a whole bunch of examples of things that you did not realize with that property that makes it a hot potato. But maybe you're setting this up so that you know, hey, I already have the vehicles there. I'm going to fill them later. Or I'm a business and I'm expanding my operations. I know that I'm going to open up 3 locations in the valley, and I set up those ahead of time there's other reasons. I'll get into it. On some of this is credit, sometimes this is credibility, right? Sometimes I'm setting these things up for a franchise. Sometimes I'm setting these things up just because I want to get out ahead so that I already have seasoning of that business. So someone doesn't say, oh, you just opened this 2 weeks ago and now you're looking to license, or you're looking for credit, or you're looking for something else. If I set it out far in advance, quite often I'm going to have better credibility. I'll get into that in just a second. So I set these things up in advance for liability protection, and to me, it's cheap insurance. This is kind of the argument of people that say, hey, I threw all my money away on car insurance. I never used it. I've never gotten into an accident. It's there if you need it, but if you, like, the last thing you want is to need it and not have it there. The exposure could be millions of dollars. And I'll relate this. Back when I started in the 90s, I was working with a client and they bought a commercial building. And I said, hey, you should put that in a limited liability entity. At the time, we used limited partnerships and LLCs. LLCs had not been uniformly accepted, and there was some question as to how they would be taxed under some circumstances. So they weren't 100% throughout the US, but they were getting there. And I had an accountant say, all you need is good insurance. You do not need to waste the expense of that LLC. And my response to them was, well, why don't you go ahead and indemnify the client then in case there's an exposure? You cannot close now in your individual name on most commercial properties, especially if there's any sort of financing, because they do not want that liability that comes along with that building, and they do not want the bleed over between personal and the business. And I say that now because I still see that coming out of the mouths of professionals who are saying, oh, it's not worth the expense. To whom? Like, I am trying to address a risk, and that risk is huge, and my cost to address it is small. And they're saying, hey, you're wasting your money here. Sometimes if you set these up, you may not need it. I set up 4 LLCs in Indiana, and I only buy 3 properties because the 4th one falls through. Okay, I'm out a few $100. But I would have been isolating off potentially unlimited liability for that couple $100. I'm willing to take that risk, and they for whatever reason, probably because they haven't been doing this long enough, they're saying, oh, they're going to put their wallet in their client's pocket and say, oh, it's not worth it. Okay, let the client make that informed decision is all I'd say. So number 1 is liability. That's pretty obvious. Number 2, and this is one that influencer said, oh yeah, this is a good reason, is tax flexibility. So I'm just going to put tax. And what this means is that LLC is a state entity. It's protection in that state. I'm paying that particular state. So 50 states, 50 flavors, right? I am paying that state for that liability protection. But then the feds, the IRS says, well, how are you going to treat it for tax purposes? Just let us know. There is no such thing as an IRS LLC tax form, right? You're either going to be ignored, or so if you own it, it's called a sole proprietorship. So this is the minimum that you want to do because of this. Let's say I set up a plumbing company. The last thing I want to do is own that in my individual name. I flood somebody's house and they take my house, right? I don't want that. I want to isolate the liability. But I can also say, how do I want it taxed? If I own it individually, worst case scenario is it's taxed as a sole proprietorship. It's no different than if I had just set up that business in my personal name. But that's not really good. If you have a profitable business, chances are you're going to be an S Corp or a C Corp. If you're bringing in investors or other things, you might be a partnership, or maybe it's a medical practice and you're setting it up where you have a whole bunch of S Corp LLCs that own that practice, and so you set up an LLC that's taxed as a partnership. It's very tax flexible. It's like a Swiss Army knife, right? It has a whole bunch of different things you could do. And then let me give you a great example of the tax. And this goes very counter to the video. I'm not going to call out the person because I really like what they do and I think they're very intelligent, but I think they're just maybe that they didn't consider some of this stuff. If I set up a business ahead of time and I use section 1202, like I set up an LLC taxed as a C Corp, and I own that puppy for 5 years and then I sell it, I could avoid capital gains on that. It was 10 million, now it's even higher. It could be a multiple of your investment even. It could be the best one I saw, I shouldn't say the worst, but the best example I can give you is a client that closed sold their business, sold the shares of their business, qualified under 1202, and had $40 million come in tax-free. I like that, you should like that, but it has a time component, which is why you set it up ahead of time so that you can meet the time component. Sometimes it doesn't make sense from a tax standpoint when you're looking at it going, hey, you didn't really get much of a benefit. You filed yourself as a C Corp, oh, double taxation. And you're missing the point. The reason I set up that business was because I was going to grow it and sell it. Do not rob me of my ability to have zero capital gains. And then let me give you another example. This was a client, this is back in the 90s again. And I had a very successful client and his son. He said, I want him to set up a business and learn to run a business. And I was like, well, what kind of business is he going to set up? Well, he's going to have to learn that. But we're going to set up a business, and he and his friends, they are going to do something and they're going to make it into a business. Literally. And I was like, well, don't they need to have a business idea first? Because this was me in the beginning of my practice. And I think you have to have the business idea first. And they were like, nope, we're going to set up the business and they're going to come up and they're going to be a think tank and they're going to come up with an idea. So these kids, and I always kind of joke, they were kind of like stoner kids, they're skateboarders and stuff. So they're sitting around trying to figure out what they want to do. And the conversations is, well, what do you guys like to do? And they're like, we really like the internet. It's the next big thing. Keep in mind, this is 90s. MySpace was a thing. They really like MySpace. So you know what they did is they started a website and they would just take different images from all over the internet and put it on that website, and people could take those little images and put it in their emails or put it in their communications on MySpace. It was the precursor to emojis. Anyway, this website went, pew! They had not thought for a second, how do I monetize this thing? That was the last thing in their minds. They were just doing something that they thought was fun. The dad was like, you need to be a business person. You should come up and incubate different ideas and let's see what comes out of it. But we're going to run it as a business. We want to make money. So there's some tax benefits for doing it. And these kids were kind of like, I'm not paying for anything. They didn't care. But they set this puppy up and that website took off. And then here comes MySpace. And they want to buy them. 7 figures, no joke. 4 young kids. They were like 18, 19 years old. And they ended up selling the business. So I always say, like, which comes first, the idea or the business? Sometimes the business comes first, and sometimes you're coming up with ideas, and that's repeated itself throughout history. Now, those were the 2 that this individual was like, hey, these are good reasons to set up a business. Like, this would be when I would set up the LLC, as if there's, a lot of people set up the LLC and make an S election, and it's really not benefiting them a whole bunch, so they shouldn't do it. And I would say, no. Let's look at the other reasons you set it up. How about number 3? This is not a small one for a lot of starting up businesses. You can isolate credit from your personal name. You can establish a separate credit profile underneath the tax identification of the business. You can qualify for business loans and lines of credit and stop funding it directly out of your pocket. And this is really important. Because I remember 2008, a lot of times people would have personal strife in their credit, and it would cost them the lines of credit in their businesses because they hadn't isolated them. In other words, the business was just them. They were listening to somebody like this influencer out there where they said, oh, it's not time to set up an LLC. Just do it in your name, Toby, da-da-da-da-da. And then I go late on, because this is what would happen in 2008 if you weren't there for this. What oftentimes happened is you would have these adjustable rate mortgages and they would adjust upwards and people would be like, oh crap, I can't pay the payment. I'm going to have to give the house back. And the bank would say, just miss a few payments. And then loss mitigation will step in and we will modify your loan. That is exactly what they said. If you were there, you know what I'm saying. And over again, because we did this over and over again, and you would see what would happen when people would miss a mortgage payment. Yes, loss mitigation would call up, but every line of credit tied to that individual gets frozen, called due, everything else. And then a lot of times the banks were lying anyway. They were getting bailed out from the feds, and they would say, like, well, now your credit sucks. So how can we modify this, right? They would do all sorts of stuff, or they would say, send in the packet of information. It would be this long, lengthy packet. You'd send it in, they'd say, you never sent it in. You'd send it in again. They'd say, we still haven't received it. It looks like you really don't want to modify, and you're like pulling your hair out. So we don't want that. That was an example of what happened when you combined your personal credit with the business. So you want to isolate it. And here's a great example. Like I could go set up an LLC and I could use my personal credit score to open up credit like with American Express. I could get an American Express in that LLC. Maybe I get a $10,000, $20,000 line, whatever. It does not report to my personal credit, does not harm me unless I don't pay it, in which case then it could harm me because I'm still a guarantor on it. Eventually, you can get to the point where once you have enough length of time owning that business, the business can get its own credit without you. But you can't do that without actually setting up the separate business. And that's why a lot of times folks like me might say, hey, let's set this up in advance. We know you're going to need it in the future, but maybe we set it up because we want to start its credit now. Maybe we want to start some business activities now so that it has a longer history. And that brings us to 4. We have credit, we have credibility. A lot of folks will not do business with an individual. So I will say it's credibility, is it credibility, bad Toby, credibility and professionalism. So if I am just Toby Mathis, hey, I'm going out there and I'm going to be the plumber, I'm Toby Mathis, the plumber. A lot of people are going to be like, okay, where you're licensed, are you bonded? What's the business? Is it just you? They're not going to deal with it. So when you set up XYZ LLC, what it's doing is it's saying, I am an actual business. It signals legitimacy to clients, vendors, to banks, even your partners. In fact, a lot of larger companies, they just won't do business with individuals. They want to see that D&B number or something. That is oftentimes a requirement. By the way, Dun & Bradstreet's up here when you're establishing credit. They want to see that you've been around for a while and that it's not just some guy in his basement who decided. And by the way, for this credibility, I said this earlier, I'm just going to repeat it. If you go out and you buy a commercial building, I have not seen anybody in the last, 10 years where they could close in their individual name with a commercial loan. They want it in a separate entity. They want it in a separate LLC because they do not want the drama of divorces, of your personal car accident, or anything like that. They want to know that they are dealing with an entity that is separate from the owner. And that goes a long ways. Number 5. This is one that I think they completely miss, and most people do. 99% of the practitioners out there screw this up. You ready? One of the most effective things you can do in your life as you build up your assets, and a lot of people say this is what rich people do and stuff like that. No, keep your personal name off of business contracts. Keep it off of the business website unless there's a reason, like in my business, I put my name out there, but make no bones about it. When you contract with Anderson Business Advisors, it's Anderson, it's not Toby anywhere, right? Public records, good luck finding my properties. Got hundreds all over the country. Good luck finding them because I use states like Wyoming where I can keep my name out of the public record. If you are a real estate investor, this is probably the number 1 item for you, is to use LLCs, and we use land trusts in that particular case too. But you're getting your name out of the public record so you do not put a big old bullseye right on your back, because all it takes is one tenant who gets really mad at you with their attorney and they decide they're going to make an example out of you. Before you say, oh, there's no way, Toby, this is stuff, you're just joking. Real data, you can go look at this. The average jury verdict that's coming out of federal courts right now is in excess of $16 million. They're huge. In the state, like in my state, I did a video, you can go look at it. I think it had over 160,000 views, maybe 180,000 views, but it was an $87 fender bender in Costco. People bumped their bumpers. $3 million lawsuit. So yes, I do not want someone to know who I am. I still remember this. I have a very good friend that runs an insurance agency, and they said the number 1 thing they tell doctors is, do not say you're a doctor if you get into a car accident, because you are asking for trouble because they assume you have money, and all it takes is they look at one of the billboards in town, and there's there's the hammer, or the, oh, no fee unless we win. There's that guy up on the board, or that gal up on the board, and now they're going after, they're trying to get through your insurance. They're trying to get to all your personal assets, and that stinks. So that's why you use that LLC for privacy, so people don't see what you own and decide you make a great target. Now, number 6 is, even if they do, we want isolation. We want to isolate the asset. So we want asset compartmentalization, right? You want to hold different assets or ventures, it could be your business, in separate LLCs to wall off your risk and reward. So that one lawsuit against one property or one division of your business doesn't touch the other. And let me use an example. Like, let's say that you're somebody who's doing franchises in your state, and you set up a parent company for tax purposes. You're saying, hey, I want to have one operating entity. I know I've listened to these people online, and there's accountants out there talking about all these benefits. I know that I need to have a S Corp or a C Corp or whatever. And then you set up subsidiaries for the different locations. Maybe I'm going to have 4 or 5 different franchises in the same town. And then there are different areas of town. Maybe it's restaurants, maybe it's Jiffy Lubes, or whatever they are, whatever they're called now. I still remember Minute Lube. And then they got by, I think it's Quaker. I have no idea what they're called now. But you could set up a separate entity for each one of those separate businesses and have it owned by a parent. And if it was like an S Corp, you have these things called a Q sub, where it's one tax return. You could have 5 businesses, one tax return, all flowing up into that business, and it ends up working great. And you set that up quite often ahead of time because you're anticipating opening up that business in the future, and you're setting it up, seasoning it, again, to establish its own credit, its own credibility. Sometimes you just know you're going to have to do it, and you set it all up at the same time for ease of use, and you sign all your agreements, and everything's consistent, and it's all in the same folder, and it's easy, and you're like, hey, I know I'm going to be doing this in the future, and so I'm getting out ahead of it. There is nothing wrong with that. But what we're doing is we're isolating the actual exposure. We're isolating the liability. Another example is if I was setting up a bunch of different rental properties. I was buying, let's go back to my example of Indiana. So I buy houses sometimes in Indianapolis. I have a bunch of them. The last thing I want is to have 4 properties in a single LLC. People say, well, why not? They're not worth that much. Maybe there's not a ton of equity. It's the cash flow off that property. It's the growth of that property. It's the fact that somebody steps on a nail on one property and they see there's 3 others, and all of a sudden a thing that would have been handled easily through insurance becomes something where they're trying to get to the other properties and they're trying to get through the insurance. There's something called being a master of your pleadings, where they might allege things that are untrue to get through it. And some people, oh, people don't really do that. Yes, they do all the time. They're trying to break through and get to the other assets. So if you put 4 properties in a single LLC, you're oftentimes asking for trouble, especially if it's your only 4 properties. I would have each one isolated in its own LLC, sometimes layered with a land trust, depending on if you have financing and depending on the state, and depending on whether we want a different level of privacy, which we can get to. But the reason we're using it is because it isolates out that liability. Now, number 7, I'm just going to call it estate planning. Estate planning. When you transfer your ownership through a membership interest instead of just retitling assets, there's a whole bunch of reasons why LLCs become very effective tools to do that. Instead of like, hey, I'm not going to put my heir directly on title because there's liability exposure. They could be going through a divorce. They could be getting sued at the time. There's all sorts of reasons why we don't. But I like using LLCs for estate planning because it can avoid probating in a particular state. And let me give you an example. Let's say that I had a rental property, a $500,000 rental property in California, if the thing even exists, right? Let's just say low end, I have a $500,000 property. What would it cost me if I owned that in my name instead of an LLC? Let's just say I owned it in my personal name. It's Toby Mathis in California. That $500,000 property to be probated, I pass away, has to be probated in California in my name. Oh, there's statutory fees in California, for example. So the California fees are based on the gross value of that. So I could have a $500,000 property with a $500,000 loan against it, and I would still have to pay this stuff. It's not equity after debts. It is the value. So even if you have that mortgage, the fees are calculated on a $500,000. Get this, on a $500,000. The attorney and the executor would get $13,000 each. It's 4% of the first $100,000. It's 3% of the next $100,000 and 2% on the remaining $300,000. That's a $26,000 probate cost just because I have it in my name instead of an LLC. Oh, but that's not the end of it, because you have to probate it there. Like to open a case right now is over $400. I think it's $435. You have to you have to do publication. You have to basically go through the whole process. So on a $500,000 property, you're talking, again, more money. We're already at $26,000, and then there's the costs. There's also an added complexity. If I do not have an LLC and something happens to me, or if I'm running a business and it's in my individual name, all of a sudden we could trigger all sorts of extra costs and fees. And so how do I run a business that is in my personal name if I'm incapacitated or if I pass away? It could be extraordinarily difficult and expensive. Let's just say I'm running Toby the Plumber. Something happens to me and it's not in an LLC. I'm probably going to force my family or somebody to go into conservatorship to get control of it if I'm just incapacitated and I haven't even passed. If I pass, it's going into probate. It's not going to survive, right? The business died with me. Business is gone. I set it up in an LLC. Now I get something else that I do not have. You ready? Perpetual existence. LLCs don't die. The LLC survives death, disability, exits of any ownership. If I have contracts with people, it survives. If I have a license with somebody, it survives. If I pass away, the LLC has the contract. The LLC survives. All the relationships survive. If I'm incapacitated, like, good luck running my business, right? You can't run it as a sole prop. It's going to go bye-bye. If I set it up as an LLC and I pass away, the LLC still exists. It does not die. There's another big reason why we use LLCs. And it kind of goes in junction with that too, right? If we are raising money, so I'll just say investors. Investors. If I'm bringing somebody into the business, they are not going to invest in a sole proprietorship. I have to, like, there's not a company on the stock exchange that's a sole proprietorship. You have to be an LLC or a corporation. So if you want to bring in investors, if you want to issue equity, or you want to structure some sort of buyout of a business, you can't do that as a sole proprietorship. You have to be an LLC or some sort of entity. Now, the last reason I'm going to hit, and I just did a top 10, there's probably some more. In fact, if I miss any, go into the comments and list them. If you think I glossed over something, put your experiences in the comments. I think that's one of those valuable things on a channel like this, is people go down in the comments and then they can see, hey, this happened to me, or this is what my experience was, or hey, Toby, you missed one, right? Number 10, contractual independence. I'm just going to say the ability to contract, that's no longer me. And again, this is going to hit a whole bunch, because if I can contract, the entity can own property. It can open accounts. It can sign contracts. It can sue or be sued in its own name. It's completely separate from me personally. And that is a huge deal. If I have an LLC and I contract, let's go back, like it relates to so many of these. Like if I contract with American Express or with any sort of bank and I want a line of credit, the LLC, if it's been around long enough, has enough existence, maybe has enough assets, can contract with that organization and doesn't need me anymore. I don't even have to be a guarantor. I used to do this when I would set up a business. I would put a CD or something in a bank, and I would say, can we use that as security for a line of credit for the business? And they would say, of course you can do that. And so it's secured by essentially a CD that's sitting there, cash. But I did that for a year or 2 years, and then the bank would say, given your payment history and the seasoning of this account, we will now release that CD from being attached as security to that loan. And then voila, the business continued to grow. I use that personally on multiple businesses. And so I've seen it work. The businesses that we still have, some of them have lines of credit. Sometimes it's like $50 a year to keep the line of credit. I keep it around on a number of these things. I don't use them necessarily. I'm not a big credit guy, but I know that if I was in a cash crunch, I could get it. So I can contract, here, get out of the way, I can contract individually, but it enables us, or with the business, it enables us to use all these other benefits. And so I just went over 10 benefits of why people use LLCs. And again, I was doing this in part because I saw another influencer do a very good video. The videos of this gal, they always seem to go viral. Very knowledgeable, good person. But I sat there and said, like when I was watching it, I was like, I could think of 5 or 6 other reasons why you do it that aren't being hit. And it's the reason a lot of business owners use these businesses, set them up ahead of time. And I get it. Some people are like, hey, you're not there yet. Some people are just starting out. But the fact of the matter is there are certain things that you cannot unring, like certain bells you cannot unring. One of those is liability. If I go out and I just do business in my name and there's any sort of claim for liability during that time, it's too late. I cannot move that out of my name after that point and avoid it. I have fraudulent conveyance or voidable transactions, voidable transfers. The way you do this is to run it right at the inception. And in real estate, I would say it's one of those areas where you have to make sure before you have a tenant in a property, that property should be tucked away behind at least one layer of LLC. And a lot of times there's this thing called reverse piercing. We're going to do 2. We're going to use Wyoming, and it's going to an LLC that's going to own an LLC in Indiana, so that if something happens in Indiana, they don't try to come after you personally. And number 2, if something happens to you personally, they're not able to get to the property in Indiana. We're using the Wyoming as a buffer. That is why you see wealthy families layering these things. And I get it. Some people aren't there yet. That doesn't mean you ignore it. You look at it and you say, hey, somebody give me the good, the bad, and the ugly about doing this. What are the benefits? What are the risks? What are the costs? Let the client make that decision. Make sure that they're informed, but let the client make that decision. As a professional, the last thing I want to do is put my wallet in somebody else's pocket. Right? I don't want to say, oh, this is too expensive, because to me it might be. To them, they may be like, hey, look, my family lost something very valuable to it because of this. The last thing I'm going to do is subject myself to that. And because of me, I said, hey, I could save you a few $100. They may not want that. They may say, I understand, but I'm willing to take that price. It's small in comparison to the benefit that I am getting and the peace of mind that I'm getting. Therefore, with all due respect, I'm still going forward with this. Thank you. Right? That's what's going on. Hey guys, if you like this type of information, first off, if you know anybody who's been going through this and they're saying, should I set up an LLC? Should I do it? Share this video with them. And just gives them a number of things to think about. It's food for thought. But number 2, if you want to learn about this, we teach a free workshop called the Tax and Asset Protection Workshop. We've been doing it for almost 30 years. It's geared very, really focused in on a lot of the real estate stuff because that's such a huge area, but it works for any type of business. It works for stock traders too. Sometimes we do specific ones for folks out there that are trading, and sometimes it works very well for businesses. It's where you get started. I would register for that. It's absolutely free. I'll put it in the show notes. Number two, if you want to talk to somebody and walk through these 10 things, or how does it apply to you? What is the experience that we've seen over the years of what the good, the bad, and the ugly that you might be facing, that you may not have thought of, that we can vet these things out? You can absolutely take advantage of a free consult. I will put that link in the show notes as well. Leave your comments, and I'll put some videos that you might want to watch coming up next.